What's up everybody, welcome back to the channel. In today's video I'll be talking about how algorithmic and quantitative crypto trading has developed over the years, and also just giving you some tips on how you can actually develop and implement strategies for this. We're seeing a rise in traders leveraging mathematical models and algorithms to pretty much execute trades, and this approach can offer significant advantages, including the ability to process a vast amount of data and also execute trades with high speeds and also mitigate emotional biases. But in this video, I'll be actually going through the fundamentals of algorithmic and quantitative crypto trading, including strategy development, implementation, and also some of the tips that you can implement for yourselves in terms of just having best practices. If you like the kind of content that I bring on this channel, make sure you hit that like button, subscribe, and always head on over to our main site, decentralized.news, for the best cryptocurrency exchange reviews, DeFi platforms, NFT marketplaces, and all things crypto. Let's get into algorithmic and quantitative crypto trading. You're going to like this video. Make sure you watch all the way till the end, and don't forget to make sure you check out the links in the description. Let's get it. So the first thing we need to cover is just how algorithmic trading actually works. This typically involves using computer programs to execute trades based on predefined criteria. And these algorithms can actually analyze market data and identify trading opportunities, and also execute orders automatically. When it comes to quantitative trading, on the other hand, is where you are using mathematical and statistical models to identify trading opportunities. And this approach actually relies heavily on data analysis, historical data patterns, and also quantitative techniques to develop your trading strategies. So there are several benefits that I'd like to obviously cover here. The first one is the issue of speed with algorithms. These can execute trades in milliseconds, taking advantage of short-term market inefficiencies, and also very precise in terms of automated trading, which reduces human error and allows for precise execution of your trading strategies. When it comes to these two types of trading, it's also very emotion-free, which means algorithms follow predefined rules and eliminate emotional decision making. So when it comes to developing algorithmic trading strategies, you need to think about things like data collection and analysis, for example. So the foundation of any algorithmic trading strategy is data. Collect historical price data, trading volumes, and other relevant metrics. Analyze the data, identify patterns and correlations that can inform your trading strategy. Strategy design is another thing. Designing a trading strategy that's based on the insights gained from data analysis. You have common types of algorithmic trading strategies that include things like trend following, which is identifying and following market trends, buying when prices are rising and selling when they're falling. You have things like mean revision, reversion, which assumes that prices will revert to their mean over time. So buying when prices are low and selling when they are high. You have arbitrage, which exploits price differences of the same asset across markets and exchanges. You have market making, which provides liquidity by placing both buy and sell orders, earning a profit from the bid-ask spread. We also have something called backtesting, where you are obviously, before deploying your algorithms, you're backtesting the algorithm using historical data to evaluate the performance. This just helps you identify potential weaknesses and optimize strategies. So for example, if a trader develops a trend following algorithm that buys Bitcoin when the price crosses its 50-day moving average and sells when it crosses below, by backtesting this strategy, the historical data, the trader can actually assess the profitability and make necessary adjustments. And I know if you're new to crypto trading, or even if you're an experienced trader, but you just are not involved with algorithms and this kind of quantitative trading strategy, then you can most likely find this a little bit hard to master initially, one thing I would typically recommend if you're getting started is to use great crypto trading platforms like Prime XBT. Why do I say this? This is not only a well-reputable trading platform that's been in the space for a long time. You're able to do crypto futures, perpetuals. You're able to do CFDs and forex trading. You're also able to do commodities trading. And really the core feature that I feel really stands out for them above all else is their copy trading features, where you're actually able to trade by simply following other experienced traders who you're actually able to see historically how they've performed over time, see their wins, see their losses, and just really by a simple click be able to follow those traders and trade alongside them. And if they make profit, you make profit. And it's a great way to actually really get involved in kind of sophisticated ways of trading, where you have these traders that have a lot of experience that use some of these strategies, and you can literally piggyback off that by simply using copy trading through platforms like Prime XBT. Make sure you check out the link in the description. What I've done is gone ahead and actually really secured some incredible prices and welcome bonuses for you as well. So you can earn up to 7K, in terms of your deposit bonuses through using my link. So make sure you check out the link to Prime XBT below. I've also done a full comprehensive review of this incredible platform before, so make sure you check out some of our previous videos, and also check out the link to the article down below. So what can we also talk about today when it comes to just the implementation of the algorithmic trading strategies? First, you need to be choosing a trading platform, right? Select a trading platform that supports algorithmic trading. Popular platforms include things like MetaTrader, where you have a platform like that widely used for forex and crypto trading, offering robust algorithmic trading features. TradingView, which provides charting tools and the ability to create, test trading algorithms using Pine script. You've got QuantConnect, an open source platform that supports algorithmic development, backtesting, and live trading. Then you have also the issue of how you actually code the algorithms, writing algorithmic using programming languages such as Python, C++, and JavaScript. Python is particularly popular due to its extensive libraries for data analysis and machine learning. And another thing that's really going to, I think, get really popular is using AI to really kind of create a lot of these coding algorithms. Also, testing and optimization is something that you need to be aware of, just making sure that you test thoroughly in a simulated environment to ensure it performs as you expect, optimize the parameters, and refine the strategy based on those test results. And you can then deploy your algorithm, right? So once your algorithm has been tested, optimized, you can then deploy it to your chosen trading platform, monitor the performance regularly, making adjustments as needed. So when it comes to quantitative trading techniques, we have to talk about statistical arbitrage, which is a technique that involves identifying mispricings between correlated assets and exploiting those inefficiencies. It requires a strong understanding of statistical methods and correlation analysis. You also have machine learning models where you can enhance your quantitative trading by identifying complex patterns and making predictions based on those large data sets. Techniques such as regression analysis, neural networks, clustering can also be applied to trading strategies. A trade that uses machine learning models to predict, let's say, a Bitcoin price movement based on historical data, social media sentiment, and macro economic indicators is an example of how you would use these models, and the model predictions are then used to inform your trading decisions. But of course, there's always the issue of risk management. So you need to make sure that you have robust risk management techniques as well, like stop loss orders, a diversification of your portfolio, monitoring market conditions to mitigate those potential losses, Also, there are best practices, like I did say in the beginning of the video, that you need to be looking out for when it comes to quantitative and algorithmic trading. Continuous monitoring is one of those things. You need to make sure you are monitoring the algorithm and how it performs correctly and adapts to changing market conditions, the regular updates, making sure you're refining the algorithm based on new data, market developments. Continuous improvement is key to give you that competitive edge. Also, risk management, like I said, is something that you need to make sure you are having those stringent risk management protocols to protect your capital, including setting your position size limits, stop loss orders, maintaining a diversified portfolio, but also making sure you're staying regulatorily compliant. That means ensuring your trading activities are obviously compliant according to the relevant regulations, including understanding the legal implications of algorithmic trading in your jurisdiction. Also, the ethical considerations are something you might want to think about. Market manipulation, fairness, developing and deploying algorithms responsibly. So at the end of the day, algorithmic and quantitative trading offers a powerful tool for navigating complex, volatile cryptocurrency markets, developing a robust trading strategy, meaning you have to leverage these advanced technologies, adhering to best practices. And as we see this crypto market continue to evolve, you will see that a lot of this will come to the forefront. And as always, I try to be the one that gives you the alpha way in advance. And make sure you go to our main site to learn a lot more about this. But like I said, if you want to get started with your trading journey and using a platform that's reliable, that's really great, make sure you use Prime XPT. Certainly lives up to the hype. It's a platform that's easy to use, and you can use it in a very smart way, and you can do research and analysis with some of the tools that they provide. It's a cutting edge platform that's been continuously evolving for a very long time, a great reputation, and just great product, and also just a great user interface. And if you want to learn more as well about DeFi, for example, decentralized finance, go to defi-millionaire.com, which is my website, where you can download my free book and learn about decentralized finance, anything and everything like liquidity mining, yield farming, trading on decentralized exchanges, all of that good stuff. Also, make sure you follow us on all our socials, like, share, subscribe, turn on the notifications. I will see you guys in the next videos. Peace.